Okay guys, welcome to this next trading example video, and in this particular example we're going to be covering an ES long on a gap fill in conjunction with the previous day close in the open area. Things to keep in mind for this trade example: it occurred again on 3 time frames. We had a gap fill, a big picture uptrend, so the market was moving up in the bigger picture on the daily. And then we took into consideration the previous day close and the open price levels, and that goes hand in hand with the gap fill and the previous day close. Okay, and so if you guys need to review the course at any time for this particular example or any example, then go ahead and take a look at your derivatives day trader course. For this example, review parts 1 and 3. Okay, so let's just get right into the trade example. Here we go. So in this example, we were looking for price to pull back to the previous day close area in the open, basically a gap fill. We wanted prices to pull back, fill the gap, and then expected them to continue to move up. The regular trading hour previous day close was the area for the gap fill. So we pay attention to that anyways. But the market gapped up, and we wanted a pullback to that area for us to get long. That particular area of interest that we were looking for, like I said, was the previous day close plus the open for the market. Bigger picture, we were on an uptrend. The market had been holding support and continuing to make new highs. And again, it appeared on 3 time frames. You can see that by the 3 big X's. So let's go straight into each of these charts. As usual, we have our multiple time frame confluence. That's why we have multiple charts up here. We have a 15-minute, a 240-minute. We have our daily. We even have a 5-minute with the day session only. These are continuous 24-hour charts because this is a futures market for the ES. And then we're also looking at the day session for the ES, meaning the regular trading hours for the US stock market when stocks trade. So we wanted to take a look at both. We have the multiple time frames, 1, 2, and 3, adding to the confluence of our trade, adding to the conviction of the trade, right? Take a look at the 15-minute chart. This green dotted line is the open for trading on this particular day, this candle. The red dotted line is the previous day close. So keep that in mind. Going back to the day session only, we can see that the market had gapped up at the open, 28.57-ish. Previous day close was 52. So there was about a 5.5 point gap that the market opened up at during the US stock market hours. We wanted to see prices pull back and fill that gap, meaning hit the previous day close area and bounce from that. And why are we looking for gap fills? Gaps definitely create turning points and opportunities in any market. Doesn't matter what it is. Gaps show a true imbalance in price. And so if there's a gap that needs to be filled, the market will tend to gravitate towards that area and basically fill it like a vacuum. When it does that, it just depends on what type of gap, what market. There's other considerations to think about. But in this case, we had about a 5-point gap that we were wanting to get filled. Plus, we had the previous day close, plus the open for today's session in confluence with our multiple time frames and the gap fill area. So we're taking all of these things into consideration and waiting for the market to get to a price level that we would be buyers. Another thing to look at is you can see right here, look at the move out of this area. Prices had been basing, trending, and then boom, explosive move higher. Definitely some buyers in this area, lack of sellers in this area, right? You would say that's fair. There's more buyers than sellers, and that's why prices went up. So if we were able to get prices to move back down to this area, the thought process is if there was buyers there originally, there's going to be buyers there again to step in and support price. Compound that with the opportunity occurring on multiple time frames. Price would be dipping below the previous close in the open. It would be filling a gap. And then also, finally, big picture on the daily, the market had been moving up. It pulled back, held down in here, and rallied up, looking like it wanted to take out these highs. So we were in a strong market environment, multiple time frame confluence that adds to our conviction, gap fill, off of a pullback, looking for a buying opportunity, big, strong, explosive move out of that zone on multiple time frames, and that's really what created this trading opportunity. Pretty easy to understand. It's not overly complicated. We're not looking at moving averages. We're not looking at a million different things. We're looking for what price is doing, what price has done, and where it could potentially go next. Measuring our risk to reward ratios, defining our risk, and looking for these factors to add up to create a high conviction, high probability trade. And that's what we do. So hopefully this example was helpful. Let's just go over it one more time before we go. This was a long on the ES off of a gap fill that coincided with the previous day close and the open. It occurred on multiple time frames, 1, 2, 3, 240 minute, 15 minute, and a 5 minute. The day session chart showed us where a gap fill would occur. That's where the turning point happened. That's what we were looking for in this area to match up with this. We had a nice strong move up out of that area, and that was apparent on 2 time frames. More importantly, it happened on a bigger time frame. So we needed prices to pull back into this basically box, this level, for us to be buyers. Thought process again, buyers were apparent, buyers took price up. If we got an opportunity to get into that area where buyers were apparent, buyers were present, that would create the opportunity for us to hop on board and take the ride up in this particular market. So that's it for this trade. Hopefully this was helpful for you guys. Again, these are the type of opportunities that we're looking for each and every day in the markets. If you have the derivatives day trader course and you need to brush up on anything in this example, review sections 1 and 3, and you should be good to go. Hopefully this was helpful. If you guys have any questions or anything like that, feel free to shoot me an email, jeff@simplyderivative.com, or check us out at simplyderivative.com. And let's get on to the next example.